again today. Rob Robbins, Atlantis Home Advantage at Cornerstone Mortgage. I've been doing this for 15 years, and I want to give you some insights on credit today. What makes up our credit? What scores are needed? Myths about credit, and of course our number one secret about credit improvement. Now, what makes up our credit? History. New accounts every once in a while, not too many times. A variety of accounts. Kind of think of it as the balanced diet of having the right types of credit. And of course, the one we all know is payments on time. And the last one is balances. This is one we're going to focus on a lot. Credit scores needed for today's mortgages. Currently, right now, to be able to buy a house, you're going to need, for a majority of the banks, a 640 credit score or higher. Now, that's not what the government has written. The government has written that you can get a conventional loan, a VA loan, a USDA loan, all with at least a 620 credit score or higher. And then FHA allows for even going down as low as a 580 credit score. Now, those are going to come in with a little bit more tricky type situations. You may have to show some more documentation in order to get a loan or have some more restrictions on those loans. But they are available to you if you have your scores at least that high. Now, myths that we have about credit happens every day, all the time. I have these same questions asked me. I heard that if I get my credit pulled, my scores are going to drop, or that they dropped 50 points the last time someone looked, or why don't my scores match what you guys have? Well, there's a lot of different reasons for that. First, let me address the big one, okay? There's a lot of people out there that are still under the impression that your credit scores are going to drop if you have your credit pulled with multiple lenders. And this is not the case. There is a government rule that's been out since the early 2000s called the 14-day credit rule. The 14-day credit rule protects you, allows you to actually take the opportunity to have your credit pulled and shop to get yourself the best rates, closing costs available. Okay. Now that 14-day credit rule is real simple. You have at least 2 weeks, up to as many as 45 days with one or two of the credit bureaus, in order to have all of your credit reviewed for the case of purchasing a house or a car. Now, don't mess these up with any other types of credit at the same time. It will throw that matrix off. However, 14-day credit rule is to your advantage to take advantage, to make sure that you are getting the best deal you can. Second, my scores dropped 50 points after the last one. This is not usually the situation. A lot of people end up pulling their credit for multiple reasons. They may also have had their credit looked at by other creditors recently. A lot of times collection agencies come back out of the woodwork. There's a lot of different reasons that scores can drop. And more importantly than anything else, it usually has to do with another factor that we'll talk about here in a little bit is balances. And the last is scores don't match. My scores don't match what you pulled. I had a 680 credit score and you're telling me I have a 660. Well, these things happen. Now, what happens there is the score that you're looking at is called, a lot of times, a Vantage score on Credit Karma and some of the other ones out there. Experian has their own Beacon score. Equifax has MyFICO. They're all using what's called a non-weighted or unweighted credit score so that you can get educated as a potential credit buyer. Now, these are not accurate to every kind of industry that you may be inquiring with. Mortgages, car loans, credit cards, employment even, they all can score completely different from each other, let alone the unweighted score that you're looking at for yourself. And of course, last, we're going to concentrate on what's our number one secret to credit score improvement. And that is credit card balances. Credit card balances is the number one way to either become a hero or a zero in your credit. Balances that exceed 50% of the credit limit are considered derogatory. Now, you may have seen on little blogs here or there, Credit Karma, some of the other newspaper articles and everything, where they suggest that you need to stay below 30% of the credit limit. Now, I would not say that is a suggestion. I would say that's a hard line if you truly intend to get your scores up. The reason being is that if you look at the pie chart, and I'm going to put one right over here, 35% of your overall scores is based on your payments on time. Balances is almost equal with 30%, right? And if 30% versus 35% of your entire score is based on balances, that has almost the same equivalent of missing a payment every month. So balances that exceed 50% every month have almost as much damage as missing a payment. You wouldn't want to have your credit card go without a single payment the entire year. So make sure you pay down your credit cards as low as you can, or ask for a credit limit increase so that if you're going to utilize the same kind of money almost every month on a card, that you're not going to endanger your credit score from doing so. So that's the biggest trick to getting your scores up, is credit card balances. Now, if you have some difficulty getting those balances there, if you don't have any credit anymore, if you have limited credit, you may also want to seek looking into secured credit cards. And we're not talking about a regular credit card, we're talking about a secured credit card. These are done via you sending in money into an account. They're going to give you back an equivalent amount of money as a credit line. Now, that doesn't mean that you still don't owe them if you spend money on that credit line. You will. It's not covered by the money you've secured with them. That's in their pocket now. But a secured card will be the next best friend to anybody who's had damaged credit in the past, or maybe has really large balance accounts that they cannot possibly pay off in a short period of time. You got an $8,000 or $10,000 balance card and you need to start improving credit, we'll get a couple $200-$300 cards, and they're going to help offset that large balance credit that's hurting you. Every account you have that is in good standing is going to help dilute the negative information that you have from any negative accounts, okay? And I hope that answers any of your questions. I will do another detailed report on credit improvement with some more factors for people who've maybe gone through some harder times, foreclosures, bankruptcies, and so forth. And tune in to the next one. You have a great day. And again, Rob Robbins, Atlanta Home Advantage. We look forward to seeing you at home soon. Thanks. Phenomena. Phenomena.